What's up everyone, it's Kadi with Money Vesting. So welcome on board for another and most important market open live stream, because in a few hours we've got the Fed meeting at 2:30 p.m. Eastern, and that is going to be all about interest rates, and their forward guidance on inflation expectations, GDP expectations, and unemployment as well. So hope you all are doing great. We've got a poll already started with about 25 minutes till open. Fed's rate hike today, so make your predictions. I've got 25, 50, 75, and 1%, everything on the menu. So make your pick. The markets here overall, QQQ is up over 1.26% pre-market. We've got the SPY slightly higher, up over 89 basis points. The Dow is pushing up 67. The yields, a slight pullback here, down about 2.5%, trading just under 3.4%. So welcome on board, everyone. Thank you so much for joining. I really appreciate it. And let's see what we have with the poll. That's what I'm interested in. Once we get more and more votes in, I think it will start to get real exciting. But so far, we've only got 60 votes, so make sure that you do participate and let us know what you think about the rate hikes from the Fed today. So going over some important information before we jump into individual stocks. So here's everything the Fed is expected to announce, including the biggest rate hike in 28 years. We'll cover this after because I feel like this is going to deviate some of that sentiment with the polls that we have going on. So U.S. retail sales came out this morning and we actually fell 0.3%. And this should not come as a surprise, as because retail sales, well, consumer spending is starting to shift a little bit. And now consumers are spending more on services versus goods. And because of all the recession fears, we are now starting to pull back a little bit on spending overall. So sales of the U.S. retailers fell 0.3% in May. The first decline since the end of 2021, largely because of fewer auto purchases, and yet rising prices due to high inflation have also discouraged shoppers overall. And economists were expecting a small, modest gain of 0.1%. So big. I would say this was a big miss, because we were not only wrong on the direction, but also coming down 0.3% versus gaining 0.1%. And retail sales are a big part of the consumer spending and offer clues on the strength of the U.S. economy. And after adjusting for 1% increase in inflation in May, the real retail sales fell by more than 1% last month, once adjusted for inflation. So, on one hand, you're starting to see the retail sales coming down. On the other hand, you've got savings rates coming down to really, really low levels, so under 4%, and consumer credit is going higher, because I feel like consumers are spending more on the necessities, which is gas and groceries, as opposed to more discretionary items. So that's really what the pivot's happening from a more consumer standpoint right now. Again, we'll go over some of those things later. I just want to make sure that everybody votes before we go over, of course, what the expectations are from the Fed today. So Atlantic Equities downgrades Robinhood, puts a price target closer to $5, I think, on the stock. And Robinhood pre-market was selling off here. So let's take a look. Robinhood here down about 2.5%. So trading just over $7 a share for Robinhood right now. We got Canaccord upgrading Snowflake to buy from hold. JP Morgan reiterates Amazon as overweight. And then let's see here. We believe Amazon likely has further pricing power. We do not expect materially elevated churn or slowing customer acquisition, considering the Prime's bundle's 1,100 estimated value. So they've got an overweight rating on that stock. Morgan Stanley reiterates Apple as overweight, however, lowered their price target to 185 on the stock. And Mizuho reiterates Tesla, Rivian, and NIO as buy, and sees electric vehicle companies having a strong second half of 2022 when it comes to production and deliveries as well. And Cowen reiterates Netflix as outperform. I gotta tell you, Netflix, I'm like this close to pulling the trigger on Netflix, given how low the multiples are for the company. And with their ad-supported tier, which might come on board later this year, will be a nice revenue stream for the company as well moving forward. Now, Kathy Wood also says market is pretty close to a bottom. Tech stocks will hit trough and recover first. So she said on Tuesday the technology stocks will hit the bottom before the broader market, repeating a historical trend from the past crisis. And in the wakes of the dot-com bubble in 2008 financial crisis, the tech-heavy NASDAQ hit its trough months before the S&P 500 did, and therefore recovered first. So take it for what you will, and we'll see if that actually does happen or not. And the risk of recession is growing. Here's why it may be inevitable, because of the soft-ish landing the Fed has to do. And one of the former Fed nominees today, Judy Shelton, I mentioned this in our Discord as well. I was watching one of her interviews in CNBC earlier. And she mentioned, kind of like reaffirmed what we've been talking about, is that a large part of the inflation, which we know is coming because of supply issues, because of supply of gasoline and energy and of course food with all these exports. And by the way, President Biden also sent a letter to 7 energy companies today, all including Valero, Shell, BP, Chevron, Exxon, all these companies, stating pretty much that they are profiteering and these above estimates or above normal profits is going to be unacceptable. So that's what he said, and to try to find a solution how they can actually solve these energy crises. But whatever, Judy said that since this is more of a supply chain problem, and when it comes to supply of energy and all that stuff, even the Fed rate hikes is like punishing the economy overall, because they can't control the supply. All they can do is hit the demand pretty hard by raising rates. And if they do that, then it's possible, it's very much a possibility that we are in a recession with high inflation. So if that happens, that pretty much creates a stagflation environment because inflation is going to be pretty elevated, and at the same time, growth is going to start to slow down. So that creates a stagflation or stagflationary environment for the overall U.S. economy moving forward. So we'll see, what happens over the next couple of quarters. GDP numbers are still due for second quarter. Of course, we're gonna end the quarter in April, May, June. So at the end of June, we're gonna end the second quarter, and those numbers will be due in July. So, all right, let's see where the results are right now. So 0.25% as expected. We've got 3% people expecting 0.25% hike from the Fed. About 32%, so about a third of people expecting the Fed to raise rates by 50 basis points, and more than half, 55%, expecting the Fed to raise rates by 75 basis points. So, and then 9% expecting the Fed to be even more aggressive and raise rates by 1%. So, again, somewhat expected. I think 75 basis points is what the market's priced in overall. If you come over to our, CME watch tool, and this is the Fed's probability, target rate probability for June 15th, 2022 Fed meeting. This is again today, and the current target rate is between 75 and 100. And if you plug in another 75 basis points, we're going to end up at 150 to 175. And that's a 75 basis point hike right now, which obviously flipped over the last couple of days, up until I believe Monday of last week. Actually, might have been Tuesday or Wednesday of last week, so midweek last week, just about 1 week ago. This right here was at over 90%, and this right here was at less than 5%. And now, since the inflation numbers have come out, the market has completely pivoted to a more aggressive Fed, and now everybody's expecting a 75 basis point hike going into today's Fed meeting. I don't know. I wouldn't be surprised if Jerome Powell stays steady at 50 and then opens doors for 75 in July. But that could also come as a big surprise to the overall market. We'll see what happens. But yeah, we got 30% people expecting a 50 basis point hike, 57% 75, and 9% expecting a 1% hike from the Fed. So should be interesting. The markets overall pushing higher here, pre-market at least. This week has been brutal. So we've seen 3 consecutive days of losses. So Friday, Monday, and then of course Tuesday was kind of flat, but Thursday before the inflation numbers, Friday on the day of inflation numbers, and then on Monday, 3 days of consecutive, back-to-back 2+% red days for the markets. And yesterday was kind of like a consolidation day. And today we're starting to see a little bit of a rebound once again, because we are really, really oversold from a technical standpoint right now. So, okay, let's see. 75 basis points, at least, Anthony says. Anthony says red day, 75 basis points. How do you expect the markets to react? Well, Robinson, I think that is pretty much priced in. So 75 basis points in itself, if the Fed actually goes ahead and does a 75 basis point hike, that's not going to be an event that moves the market. What they say and what they actually project in their summary of economic projections is going to be a bigger piece to the markets actually making a move. So just from a Fed hike perspective, if they go ahead and do a 75 basis points, I think the market's already expecting that. That's not going to be new news. But what they say moving forward is going to be the catalyst that drives the market. Now, if they do 50 or 1, so anything lower or higher than 75 basis points, and that will come as a surprise to the markets. And, as I mentioned in my yesterday's market update, regardless of what they actually do, 50, 75, 1%, it's just a question of picking one of the best worst choices. You know what I mean? So it's like pretty much all bad choices in front of you. You just have to pick the best bad one. That's kind of like the situation that the Fed is right now in, because they're, again, increasing rates into a slowing economy. They're doing it while the economy is showing signs of slowing down. Retail sales were down. Consumer spending is pivoted. Savings rates are down. Consumer credit's higher. So when you put all those pieces of the puzzle, it's pretty certain that soft-ish landing or soft landing is just, not even in the question anymore. And it's going to be a very, very difficult job for the Fed to avoid a recession and bring inflation down. That they're in a very, very tough situation overall. So, but technically speaking, if you talk just about how many stocks trading below the moving averages, we talk about the RSI, the MACD, the technicals overall for the markets, they're incredibly oversold. So based on that perspective, a bounce is something that's, very common to see. So would not be surprised to see a little bit of a rally, after the Fed. That's been kind of like what's happened over the last couple meetings here. When the Fed comes out and says something, the markets do rally, but that all fades over a couple days later as people start to digest exactly what the Fed said. In the last FOMC meeting, might have been the last or the time before that, one of the key things that I felt like nobody talked about was the Fed was really resilient in a way that they said, and this is what Jerome Powell said, that we are willing to do whatever it takes. Like, we will not hesitate, right? They will not hesitate despite what's going on in the economy. They are committed to bringing inflation down. Like, he's mentioned this in a separate podcast that we covered. He's mentioned this during the Fed meeting. He's mentioned that during the speech. He's mentioned that price stability is their number one goal, and they're committed to bringing it down. So they can be overly hawkish right now, and they can definitely come off that way. So that obviously, puts a lot of pressure on overall equity markets as to what are we going to see from the Fed, because now the expectations have jumped from 2%, 2.5% to now over almost 4% for the full year. So if you come over to probabilities, you'll see that right now so we are ending this year on December 14th with the last Fed meeting there. And there is a 42% probability now that we're going to sit somewhere between 350 and 375. It's come down a little bit. So I think yesterday when I checked in on this, we were at 375 to 400. So it's slightly come down. So this number was actually leading 375 to 400. So for the year, it has come down a little bit. All right, let's see here. Okay. All right, so I'm going to go through some of the comments here. All right, extreme fear index at 17. So, yep. So fear and greed index, obviously, very, very fearful right now. So he even mentioned Paul Volcker recently. That should scare you. Yeah, so, he admires Paul Volcker very much. And one of the things that he mentioned in the podcast, he didn't talk about this as much as in the speech as much as he did during the podcast. I covered a podcast where he had a chat with one of the publication's authors, but he mentioned that he admires Paul Volcker very much, and one of the qualities that he admired was going against the consensus and doing what he felt was right at the time. And of course, Paul Volcker, had a 1,000 point hike back in the 70s when he jumped interest rates, the prime rate, from 10 to 20%. So that was obviously very, very, very aggressive, shocking the overall economy and the demand that was resulting in very, very high inflation numbers. So we'll see what Jerome Powell does. But the only concern I have is that they are doing things, they're raising rates, trying to solve a problem which is not in their control. That's my only concern, that right now they're in a situation where inflation is not so much a monetary policy issue, but more of a geopolitical issue. And as I've mentioned this in my previous updates as well, because unless the energy prices come down, again, you guys can agree or disagree with that. Feel free to do that in the live chat. But unless energy prices come down, inflation overall is going to be pretty elevated. And that is to say that gas prices will be high and oil prices will be high. And that pretty much affects prices for almost everything, right? That's being transported from one place to another. Even in production, oil is utilized in so many different things. So unfortunately, that's my only concern, is that the Fed is punishing the economy by raising rates very, very aggressively for a problem that somewhat is out of their control now moving forward, because they can't control the supply. They can't control the supply. Okay, so all right, I'm gonna end the poll there. 50% expecting 75 basis points, so half the people 75 basis points, and we've got 33% 50 basis points, and then 54% 75 basis points. So majority of people are expecting 75 basis points here. So I'm gonna end the poll there. I'm gonna start the green and the red one. So Raj, energy is not part of CPI. I might be wrong. So energy is 10% of CPI. And if you exclude for just energy prices overall, if you exclude for that, then total CPI sits at 6.6%, right? And if you exclude for energy, food, and used cars, those three things, then total CPI sits under 6%. So it's really telling to see where overall inflation is. If you exclude for certain items, but then of course if you include for them, we're sitting where we are, which is pretty elevated overall. So okay, I'll also include the so Leica Star says you don't have an option for 2% rate hike. Really? I think 2% in one single day, I think that would completely shock the markets. It's hard to understand right now in this environment, would that be good or bad? Because that's like really aggressive, right? That's really high interest rates. I guess in the short term that will be really bad, but in the long term that might be really good. So anything that's very, very aggressive, say 2% or 3% or 4%, 5%, anything like very hawkish from the Fed will be bad in the short term, but good in the long term. So that's, kind of like a difficult situation as to how the markets will price that in. So, okay, so red, green, and flat is what I'm going to include in today's poll. Brandon says just raise it 3% and get it over with. 2% would be nice. That would be nothing short of catastrophic for the markets overall. So Nvidia at these cheap levels, well, I'm interested in Nvidia closer to 120s. If it does come down to 100, 120s, that's something that I will be looking at. I have really been paying attention to some of the cash secured puts. I also mentioned this in our Discord that if you are sitting on cash, waiting to deploy it, waiting to invest the money into the markets, looking at different deals, look at the options chain, look at the cash secured put options, because they can be very, very lucrative in this environment. Since we are already in a bear market, you can get the strikes and the cost basis down to what you want, and you can get paid to literally wait, right? So you will be generating premiums just to wait for the price to come to you. So those are great premiums. I sold a cash secure put on Upstart. That's a 30% return over the next 6-7 months if it expires out of the money. If it expires in the money, then my cost basis will be very, very good, considering Upstart's valuation and revenue growth and whatnot. So I would only, encourage to do that with stocks that you are willing to invest in long term, that you're willing to hold for the long term as well. And just look at the options chain, what type of premiums you can get for that cash secured puts, because the sentiment is just really bearish. The sentiment overall is just really weak, and you can get very good premiums for them. And if you do that calculation, premium over your total investment, which is your cost, I bet you can find deals 25, 30, 40% returns over the next 6-7 months. So, that's really solid given the current market environment. And anything 20% plus, I'll take it in a 6-month, 7-month period. So, okay, yes, make sure that you guys drop a like. I really appreciate it. So Dave says I smashed it so hard. Oh my God, so thank you so much. I appreciate that very much. So Volcker caused unemployment to go to 8.5%, so people will go broke and not be able to buy anything. Quite a hero, just caused everyone to go broke, and that will stop spending. So that's one way to look at it, because definitely when you raise rates pretty substantially, unemployment goes higher. And my expectation, unfortunately, is also that unemployment will creep up higher, not to those levels unless the Fed absolutely goes berserk and starts raising rates like crazy. But if they do 50, 75 basis points, then of course cost of borrowing becomes more expensive, and we've already seen the margins going down for companies. They're putting on hiring freezes and people are getting laid off, and Coinbase kind of rescinding their offers that they sent out already to potential candidates. That's like the worst thing you want to do if you're running a company, to pull back on all the offers that you've already sent out. So they laid off 18% of their workforce. So I wouldn't be surprised if unemployment starts to creep up higher. Now, to what extent, that largely depends on how aggressive or conservative the Fed is going to be. So, there's again, like I said, this is the perfect case study about the overall economy. Like if you're tracking the markets day by day, you're getting the best course on markets, the economy, and the entire monetary fiscal policy. Like, this is the best case study that you can ask for from the markets, and how everything kind of like works together. And this is just a really big puzzle of economics and the markets overall. So I don't think anybody can ask for anything better than what we have right now. So Hustle Smart says, a very bad today to watch. I have zero faith in this market this year. So yeah, I mean, this year there's going to be, expectations are that we are going to see more consolidation, more pullbacks, more accumulation phase, pretty much, because the S&P 500 entered a bear market, like a official bear market on Monday. We have breached the 20% level, I think, back in May, but we didn't quite close at those levels. We got bought up fairly quickly. So an official bear market takes about a year to recover. So, this is not the type of market where you expect for us to see quick gains and the markets to go up very fast. I think 2020 and 2021, the expectations were set very, very high because everything that you throw money into is going up very nicely. But this year is what the other side looks like when the Fed is actually not doing the markets a favor by lowering interest rates or actually raising interest rates. So this year, we're in a bear market, recession. That's the big question now, and how hawkish the Fed is going to be and whether inflation will come down in the future or not. Those are some of the questions that markets are looking for. And until those things are cleared, I think the markets will be in a lot of choppiness, a lot of consolidation. We're still in a downtrend. We'll still see some bear market rallies here and there, but for us to see a more sustained rally to the upside, a full-blown change in direction, and for the markets to regain control over those moving averages, I think that happens after some of these dark clouds have cleared up from an economic perspective. So Caldron, quick question: does raising interest rates really help in fighting inflation? So that's a great question. They do. That's kind of like theoretically, that's what higher interest rates are supposed to do, because they do pull back consumer spending because your cost of borrowing goes up, right? So debt becomes more expensive to borrow. Your mortgage rates, your credit cards, your auto loans, everything starts to tick up higher as interest rates go higher with them. So people tend to spend less. And as a result, as people spend less, prices come down eventually, basic demand and supply. But this time it's a little bit different, right? Because you're not really seeing, yes, you're seeing high demand. Demand's also starting to pull back a little bit. We just got that retail sales numbers. They're starting to show signs of a decline. But in my view, at least, it's more of a supply problem when it comes to energy and food. So unless those things are solved, there's very little to nothing that the Fed can do. They can raise interest rates, but we'll see if they're actually able to make a dent in the inflation numbers overall. So, okay, let's see. Largest market moves come in bear markets. Yep. So Cowdy, today Powell will do the speaking. Yep. So Jerome Powell will be talking today at 2:30 p.m. Eastern. Unfortunately, it'll be like way past midnight over here, so I'm not going to be able to live stream it. But you guys know I will be posting a complete summary and updates first thing in the morning. But that being said, I'll post a couple links that will be live streaming it live, that you can actually watch the Jerome Powell conference and the questions asked to him as well. I think Jerome Powell will be under a lot of pressure because inflation is not showing any signs of slowing down, and I think he will have to deal with a lot of questions. Jesus Christ, what is this? Like, I'm trying to block this one spam account that just keeps posting. How do I do that? Like, I've been trying to hide user. Stefan says, I have to say, Caddy, the fact that you don't have at least 100K subs yet is criminal. Yeah, I mean, the channel growth's been really, really slow, but I'm happy with that. You know, as long as we're able to have fun and talk about the markets, and I'm able to do, you know, things that I love with you guys, I think that's all that matters. Regardless of whether we have 60,000 or 100,000 or a million subs, doesn't really matter. But anyway, the markets are open here. So we got S&P 500 opening up 1%. We got the NASDAQ opening up here just in a minute. Let's just wait. It's going to open up past over 11,000 once again. So just give it a moment. Dow Jones is up over 282 points. So up close to 1%. There we go. NASDAQ opening just shy of 11,000. So 10,975. And the yields are slightly down about 2.8%. We got individual stocks here. So Google slightly up 1.88%. Tesla is at 661 now, so just slightly down about 30 basis points. Then we got Amazon over 1.7%, slightly higher. We got Meta Platforms up over 2.2%, and AMD is up over 1%, just under $88, with Nvidia up over 1.4%, and Apple here over 1% right now. So once again, thank you so much, you guys. I really appreciate it. Some of the great comments here, so thank you very much. Again, appreciate you all greatly. And yeah, Lori, there's a lot of spam comments here from a couple different bots, I feel like. But I'm trying my best to remove them as quickly as possible. Okay, so we'll start with the Dow. We'll circle through the banking. One sector, I feel like the banking sector. That one, VFH, or XLF or VFH. Those two, either one, you can look at. This is the Vanguard's Financials ETF. This one's come down a little bit over 25%. It's actually now trading below its pre-pandemic low. So pre-pandemic, we were trading at $77. It's down close to 1%. It's got a decent dividend yield, but banks overall have been sold off pretty aggressively because think about it, interest rate hikes is actually good for banks, and yet they are still selling off, and of course trading inside this downtrending channel, so making lower highs and lower lows. But that's because there is fears of recession. So the banking sector becomes very attractive when there are interest rate hikes, but there is no recession. But they become really unattractive, which is what we're seeing right now, when there's interest rate hikes, but at the same time there's fears of recession, because during recessions, again, spending drops, people don't use as much of their credit cards as before. Again, mortgage rates are going higher, so fewer and lower loan activity. All that plays a role with how much banks can lend out, but their profit margins do grow when interest rates go up, and this has been the most aggressive Fed we've seen in over like 2 or 3 decades. So this overall should benefit banking sector, but there's still fears of recession, which is why they're selling off. So banking, I do think there's going to be opportunities in the financial space, as XLF, VFH. Like I said, either one you can track. They're both down pretty substantially, 24-25%. I do think there's going to be an opportunity to DC it into either as a whole, or at least take a look at some of the individual banks as well. Okay, so let's take a look at the volatility first, and then we'll circle back over to some of the individual names. So VIX here down about 2%, so just under 32. We got up to as high as 34 to 35, getting tagged at those levels. To this day in 2022, the volatility has not yet dipped below 16, 17 levels, and it has been pretty elevated, right? So there's been 3 times, actually 4 different occasions we've seen the volatility spike up to 40 levels. So this was right in the beginning of the year in January, this right here in February, this right here was back in April, another 85-86% jump, and this right here, the most recent one, once again 46-47%, not quite getting up to 40 levels, but got up to 35, and right now it looks like we're on our way potentially pulling back once again. The 10-year yields are down 2.3%, just under 3.4, and energy prices overall are just slightly pulling back, with some of the energy stocks slightly down, with Exxon, Chevron down about 40-30 basis points. So Bitcoin and Ethereum have obviously been under a lot of pressure with all the risk-off environment that we've seen. And the overall liquidation, I think I read, was close to $200 billion, and the market cap dipped below $1 trillion for I think it was like overall crypto market. I might be wrong. I have to might read up on that. But Ethereum now down to, of course, 1127. $1,000 is that support. We got tagged at 1013. So getting bought up from those levels. And Bitcoin 20,000 is that support. So we got down to 20,111 and then got bought up from those levels. But overall, very, very oversold conditions for Bitcoin and Ethereum as well. Taking a look at some of the individual names here. So Coinbase is slightly up over 1.6%. So back over $52. And, Coinbase has unfortunately, on a fundamental level, did analysis on their earnings, which was very disappointing. I talked about this in the video as well. A lot of things declined year over year. Their holdings, their volume, trading activity, revenues, overall, everything was just like really disappointing on a year-over-year basis. But the CEO also mentioned that they've got a long-term perspective on the company overall, and they also warned about the seasonality issues of how crypto is, and you can see overall Bitcoin dropping 40%, 50%. Right now, I think it's down close to 70% from its all-time highs. So Kevin, there you go. For you, moving averages are coming. So right now, since we're looking at the daily chart, we've only got the 200 SMA. Let me see if I can get the. All right, that's the 300. But yeah, so fundamental wise, of course, the PE multiples, the price of sales, everything is really, really cheap for Coinbase. So it's trading at 5 times earnings, under 1.5 times sales, 1.7 times cash flow, but trades very much on how Bitcoin trades overall. So since Bitcoin's been selling off since November of 21, that's precisely the time when Bitcoin started falling. We've seen Coinbase also drop 86%. And of course, earnings had a lot to do with that as well. But Coinbase is hovering at around $45 to $50 a share. All right, so let's take a look at the overall markets, and then we'll run through some individual names. So NASDAQ still up 1.2%, not bad. S&P is up over 1%, and the Dow is up 86 basis points. Some of the Chinese stocks here. So NIO actually had a very strong day yesterday. Today it's slightly down about 86 basis points, so down to 1850. Then we got Baidu slightly higher, Alibaba slightly lower, so more or less a consolidation day for Chinese stocks. Take a look at the Dow 30 names. So let's see here. Okay, so Coca-Cola's higher. We got Boeing, Coca-Cola, CRM, Intel, Microsoft. By the way, Intel leaps, if anybody is interested. I was looking at this, and again, shout out to one of our members for bringing this up. God, man, my lower back hurts so much today because I was like doing deadlifts after like over a year, and I literally sprained my back so much that it's been hurting me all day. But anyway, so if anybody is long-term bullish on Intel, and if you're looking at over the next, let's say 2 years out, leaps for Intel are actually going for very, very cheap prices. They're going for, let's say, $22.50. That's like deep in the money leap for $17.10. And you're pretty much going to get almost a 1-to-1 correlation. So delta's 0.92. That's about as close to as you can get for Intel in this case. And that's, what is it? So for 100 shares, you'd be paying $38.50. But for a leap, you'll be paying $17.10. So if you do the math there, $38.50, that's going to be 44%. So yeah, dividend, of course, you'll be giving up on the dividend. That's a little bit of a downside, absolutely. But over the 2 years, if you do expect some type of growth for Intel, you can get the 100 shares at 44% the cost of actually buying the shares. So that's a potential idea if anybody wants to explore further with Intel. Goldman Sachs, Boeing, Coca-Cola, CRM, Microsoft, Intel, most Dow 30 stocks are up, except for Chevron, Exxon, slightly down, and Pfizer and Merck also pretty much flat here on the days. So it looks like all banks are very much in the green. So there we go. We got Square, Barclays, HSBC, Wells Fargo, Morgan Stanley, pretty much all of them pushing higher. Bank of America, JP Morgan. So very nice move on the banks today. Let's take a look at cybersecurity. So everything's green. Okta with the big winner up over 3%. Zscaler, Palo Alto Network, Fortinet, CrowdStrike, Ping. Adobe was supposed to report earnings tomorrow, right? Adobe's going to be reporting tomorrow. So Adobe here, yeah, they're reporting earnings tomorrow. Remind me, I got to do a video on them prior to the earnings to see if there's any potential. By the way, they're testing their higher lows right now, so this is going to be their ascending support right now. So that's going to be the higher low here. And of course, from all-time highs, it is down close to 48%. So we'll keep a close eye on this stock as well. I think my fair value is much lower. But earnings expectations are still pretty strong with $3.31 in EPS and over $4.3 billion in revenue. So how is Mara? It's down 92%. Will it have a chance getting back up in a year or two? So unfortunately, when a stock is obviously down over 80-90%, the gains to get back up to break even is really, really difficult, right? Think about Upstart, for example. Upstart is another stock that's down over 90% from its all-time highs. I've traded this 3 times before, and this right here was a total loss of 93%, right? For it to get back up to where it was, it needs to go up 1,100%, right? So your break-even price, your break-even percentage becomes that much difficult when the stock starts to sell off pretty aggressively. So for Mara to go back up to those levels, I think it was $83 or something, $84. That's incredibly challenging for the stock, right? That, in this environment is almost next to impossible. That's 1,100%. But that being said, obviously we've started to see this sell-off, which pretty much, again, precisely started when Bitcoin started selling off. So you can go back, literally check the date. You know what? Let me just go over and bring up BTC to this chart here. So we'll do, same percentage scale. Okay, so you can actually, you know what? Let me just do regular. No, I can't do regular. Okay, so you can see how precisely it moves, with correlation to Bitcoin. Yes, it's diverted away a little bit recently, and then of course, both on the upside and the downside. So you can see that for yourself. If you kind of zoom in a little bit, you'll notice how they both move in correlation with each other. They go up and down and up and down with each other, right? So that's the correlation that we're talking about for most miners. It's not just for Mara, but I'm sure if I bring up Coinbase, you'll see a very similar pattern, right? Look at that. So it went up here during this time, topped out in November, and then started selling off right when crypto started falling. So if you are, making a bet with any of these crypto miners or crypto stocks in general, indirectly, you're pretty much betting on price of Bitcoin and Ethereum because they will move in correlation with the overall crypto prices. So that's where we are with Mara. Unfortunately, obviously down to 686 right now, but largely price of Bitcoin is what really matters for Mara. All right, here's Arnold says Upstart is paying YouTubers to advertise it. That's when you know it's the beginning of the end. Are they really? I don't think they were. I feel like Upstart's a pretty good company. Like, in other words, like the way they do marketing and branding and the business overall, I feel like it's a more established company. You see more of that type of things, the things that you're talking about, marketing and advertising on YouTube, is from gold miners and some of the silver miners. I mean, I've been reached out like a million times to talk about companies, but I've not once taken their deals because the only sort of again, sponsorships and stuff that you'll see me working with are the companies that I actually use. I personally use them, right? So TradingView, I love this platform, and I've got a link down in the description below for TradingView. I use what is it? Another company that I use, TipRanks. TipRanks I use for fundamental analysis, and you'll find a link for that. But yeah, I didn't know that Upstart was doing that. That's like news to me. So Iceman, why can't I do options on VIX? So volatility is just more of a fear gauge, right? So it's just more or less an index. This is not even a price that you're looking at. This is more of a percentage, right? So this is like 30%. I don't know why it says USD, but it's actually a percentage. The VIX is calculated in percentage. So an alternative for that would be UVXY. So that's something that you can certainly look into if you wanted to trade that. So obviously it pushed up 45%. But this right here, of course, has sold off pretty exponentially, 50%, then pushed higher once again. So UVXY is a great alternative to actually look into if you wanted to trade volatility in general. All right, so let's see the overall markets. NASDAQ starting to gain momentum here, up over 1.7%, back over 11,000. So we are probably, God, my back's killing me, you guys. This is, I think, the first time I've actually experienced what lower back pain actually feels like. God. Oh, this is bad. This is bad. I've had trouble walking all day. So yeah, talking about the 50 EMA, we are on our way potentially back higher. So we are somewhat seeing some buyers step in at these levels. So we'll see where we finish the month of June. And on the weekly time frame, you can see the 200 SMA is also, look at that. Look at where we are, right here. Equity says you're getting old. I probably are. Is that the first sign of getting old? Come on. Really? No, I just deadlifted after so long, probably like after a year and a half. I think the last time I did that deadlifts was like back when I was in the US. So I did it after so long, and I just like ruined my back today. Lower back, especially lower back. So but anyway, we've got that 50, we've got that weekly chart and a 200 simple moving average right here. Yeah, I'm never doing deadlifts again. That's like a no for me. I'm done. But look at that buyer stepping in right here. So we have that momentum coming in for the markets right now. Brandon says this market has aged us 30 years. Oh man, that's so true. That is so true. This last 6 months have kind of felt more like a couple years, to be honest. It does. Because there's so much happened in the last 6 months alone, that it's starting to feel a really, really long time till we've seen all of this. So Brent says, feel my pain. D9325, how much you deadlift? Not that much anymore. I used to do that a lot. But yeah, today was, you'll laugh. You guys will laugh if I tell you, so I'm better off just not embarrassing myself here. But anyway, going back over to individual stocks, which we haven't talked about for some time. Nvidia up 2.4%. So that's a decent move, back over 160s. 150s was that support, so we're seeing some buyers step in for Nvidia here. So right here, this is a green rectangle that we talked about. Very nice support. We're starting to see some buyers for Nvidia. Then we got AMD here, slightly up, close to 1%, not a big move. By the way, AMD, I was looking at cash secured puts for that stock. So if you come over to the options chain for AMD, so let's just take a look at puts, and we're at least going out a month, right? So 37 days. So we got 75 paying us $225, $80 paying us $350. Timothy says 100 kilos. No, not that much. Not even close. Like I said, if I tell you guys, it'll be really embarrassing for me because I'm doing it after a year and a half. I'm going to get a lot of shit for doing really, really low weights and still pulling my back. So I don't want to go there. I think that's a story for a different time. But anyway, so $80 puts, $3.45, right? So if you do the math there, $3.45 divided by, what is it, 76.55. That's going to be a good yield of 4.5%, right? So you're making 4.5% in 37 days if this obviously expires out of the money. If you do get assigned, this is going to be your cost basis, $76, which, in my view, I think AMD at 76, I don't know, it's a great deal for of course, longer term investors. Again, 75 is also decent. 220, you'll bring your cost basis down to $73. So those are some plays that I would be looking at for cash secured puts. LND Van says 100 kilos is just warming up. So I got to work out with you then. I got to work out if you're warming up with that much weight. Man, you must be big, right? But yeah, no, I don't lift that heavy. I definitely don't. All right, so what do we want to go over now? What do we want to take a look at prior to the Fed meeting? You know, indexes pushing higher, stocks are making a little bit of a move. Tesla's up 1.7%, back up to 670s. So UVXY is slightly down. NIO, Alibaba, some of the Chinese stocks are pulling back a little bit. So Iceman, 50 basis points hike will give us a rally. 75 will give us sideways. 1% will crash the markets. Well, like I said, it's really difficult to predict exactly which rate hikes going to create which type of outcome, because you know the Fed has a series of bad options available, and they just have to pick the best bad option out of those three. So I think 50 basis points will certainly surprise the markets. Anything below 75 or above 75 will surprise the markets. From an interest rate standpoint, of course, because the market's pricing in with a 96% probability that we're going to see 75 basis points, right? That's pretty much priced in at this point. So I don't know. I still have a gut feeling that Jerome Powell is gonna come out and say 50 basis points for this month, just because in his last meeting, does anybody remember what he said? Does anybody remember what he said about the 75 basis points in his last meeting? Let me know if you guys know that in the live chat. So that's the reason why, you know, a small part of me believes that he may do a 50 basis points this meeting and might open doors for a 75 in July. Yeah, lesser of the two evil is not putting the economy into a recession, but, you know. Yeah, Stefan says off the table. So what they really said was that they are not actively considering it. That's what Sanjeev said it. So it's he said it out of question. Yep. So he said it was off the table. Well, he said that they're not actively considering 75 basis points right now. Pretty much that it's off the table right now. So I find it very unusual for the Fed, Jerome Powell specifically, to say that in his last meeting, and then this meeting out of the blue just do a 75 basis points. So I think he's going to warm the markets up with 50 basis points. That's, again, my expectation. I could be wrong. Nobody knows what's going to happen, obviously. And then open doors for 75 in July, which, again, just a month from now, we could see that also. But yeah, what the market's going to react to that is, you know, my guess is just as good as anybody else's, because like I said, they're both aggressive hikes, 50, 75, 1%. They're all aggressive, but not until we see inflation actually showing signs of improvement is till we see a sustained rally. Yeah, so he also said we'll use every tool. Absolutely. Their, you know, price stability is their main goal, and then to bring it back down is something that they're focused on. Is the Fed meeting 4 hours and 30 minutes from now? So the Fed meeting is, yes, in about 4 hours and about 37 minutes. So right now it's almost 10 a.m. Eastern. So he's going to be speaking at 2:30. So that's about 4 hours and 30 minutes. 2:30 p.m. Eastern, that's going to be, I think, midnight over here in India. And then you guys can calculate whatever it's going to be where you are. If you're in Australia or of course, part of Europe, Asia, wherever you are watching from, you can take a look at that time zone. God, the spam is back. Okay, there we go. But I think that's a fair analogy. I think that's a good way to put it. I was reading another analogy today on one of the reports that said that Jerome Powell is pretty much flying a really big plane, and usually that plane, the landing of that plane is in a nice big runway, But right now they've got very, very narrow runway, short length, and they are trying to land this big airplane where there's rocks on one side and water on another side. They got like a very, very narrow path of landing this big plane, which is the US economy. So, but anyway, everyone, that is going to be it from this live stream. Again, do apologize for not being able to stream the Jerome Powell's speech, but I will make sure to post updates and summaries when I get my hands on those reports. And don't forget, summary of economic projections also going to be coming out. I think that is going to be the big revision as to what the Fed is projecting out for 2022, 2023, and 2024, and longer term as well. And don't forget the dot plot, which I showed you guys. Let me just go over that once again. And you can see that for yourself. You can go over to that CME Group website, and you can see that for yourself. If you come over to dot plot here on the left, you go over to the chart, it should show you what the market's pricing in versus what their expectations were, right? So this is something that we discussed in our previous video. The red dot is what the market is pricing in right now based on the Fed funds future, which is at 3.5 to 3.75%, right? So that's the market's expectation. But this is as of March 2022, dot plot for all the FOMC members. This will see a big revision. So this right here, I wouldn't be surprised if all of these move up pretty substantially, right? Get closer to where the market is. And then this is where things get interesting, because 2023, 2024 expectations are pretty steady, right? We're not expected to go higher according to the Fed funds future. We're expected to stay somewhere between 3.75 and 4%. So it's just that short-term pain that we're going to raise rates in the short term, go up to 3.75, 4% by the end of this year. Of course, whether that happens or not, time will tell. But after that, we're expected to just stay there, right? Not really see as many rate hikes as what we're going to go through this year. So the dot plot will change substantially, pretty much, very much on all four fronts: unemployment, GDP, inflation, and interest rates. So that's something that's going to be important. I will be available in our Discord for as long as I can be, but I'll do a summary video after the big news comes out. So good luck for today. Again, if you have any questions, feel free to reach out. Thank you so much for joining and being part of our morning live stream here. And of course, make sure to subscribe if you're new, and also check out the links down in the description if you want to join our Discord and our community of money investing as well. So thank you so much. Have a great day. Good luck today. I would say that don't try to trade based on the Fed, because a lot of things can happen. There is going to be volatility, so stay cautious and be smart about what type of trades you take prior to the meeting. So thanks again. Happy investing, and I'll